Hey everybody, Chuck Barone. It is Monday, December the 4th, 2023. Rolling toward the end of this year. It's coming so fast, man. I cannot believe how fast this year seems to have gone by. I guess not so much in the beginning of the year, but once we hit fall, boom, here we are, man. Next thing you know, it's ho, ho, ho. And then Happy New Year, yay, 2024. Which I think is just going to be 2023 has probably been the craziest freaking year I can ever remember. And it's really an amazing thing to say after you saw what we lived through for, 2020, 2021, 2022. It just keeps getting crazier. And I got a funny feeling that 2024 might just be the craziest year yet. But so it gives us something to look forward to. We'll see. Anyway, before I ramble on any further, let me take a half a second. Welcome everybody to the show. And as always, thank you guys for your support. We appreciate you guys, sticking with us here, showing up and watching these videos, hitting me up with your questions and comments. I appreciate that, guys. I do. All right, so let's talk about these markets today. Wow, everything changes so very quickly, right? Last week, we end the week, it's like, wow, all these good things are happening. The inflation fight is over. We can already talk about, rate cuts. Markets just takes off. Well, today we hit the brakes a little bit. Okay, I think markets reassessing their optimism, coming to the conclusion that it might have been just a tad overblown. So the market's taking a deep breath and selling off a little bit today. You had the Dow Jones falling 41 points, 36,204, still a good strong number. The NASDAQ falling 119, 14,185. And the S&P comes down 24 points, 4,569. So even though we had a negative day today, still very good numbers on these averages. Market's still looking pretty strong. The question's going to be, are we getting close to a top here? So we're going to start getting some bad news trickling in, I think. We'll see how long these markets can hold these levels or if there's still a little more leg left in this bull market. All right, so bond market today. Bonds selling off today, just like the stock market. Unusual to see them both going down the same day, though. But the bond market's selling off. So you have the 10-year rising 6 basis points, 4.29% on the 10-year. The 2-year also up 6 basis points, 4.63%. So, these indexes, both the 10-year and the 2-year, have been coming down pretty dramatically. Still very good numbers compared to where they were. We saw the 10-year pushing 5% a short time ago, now 4.29. That's a big difference. The 2-year was well above 5%, staying there for a while. Now 4.63, was moving down toward almost 4.5 last week. So the bond market not really sure where it wants to go. And the Federal Reserve, of course, not being much help with their mixed messages. The dollar today rallies up a little bit, 103.65 on the index, a good strong number, back up. It had shed back down, looked like it was heading toward 102, maybe lower. You saw some big things happening in commodities. Well, now they're giving a lot of that back as the dollar regains some strength. You had gold today, yikes, falling $41.80. Big number. Still sitting, however, $2,029.20. So gold still a good strong number. Silver falling 96 cents today, almost $1 down. Still sitting $24.46. I'm telling you guys, I really believe gold and silver are going to blast off. When the dollar comes down to earth, these metals are going to really fly. I still believe silver is going to be the one where you can really get big percentage gains because it's so inexpensive to get into. You get so much more of the metal for your bang for your buck. But gold's great too. If you can afford to invest in gold, it's certainly solid. I think these numbers pretty soon, you'll look at, $2,000 gold and feel like that was a bargain. Same with $25 silver. Oil today continues its way down another 72 cents per barrel. $73.35 for a barrel of West Texas Intermediate. I got to say, I've been pretty good on these oil numbers, man. It's right exactly where we expect it to be, in between $70 and $75. It's that trough that oil seems to want to trade in. You had OPEC coming out today threatening more cuts, trying to stabilize the price. The market shrugged that off pretty quickly. I think that oil now destined to, you might see some zigs and zags, but I think for the most part, what you're going to see is oil trading between 70 and 75 a barrel. Bitcoin today, man, Bitcoin is on a roll, another plus $2,117. Last time I checked, sitting 41,740. The rally is on in Bitcoin. For you guys that are watching this show that are holding Bitcoin and other cryptos, my hat's off to you guys, man. You're making some money here. These are big, big rallies in Bitcoin. And for those of you who kept the faith, a nice little reward. All right, so as we do every Monday, let's talk about the data we're going to get this week, stuff that could move markets. I've kind of condensed this down a little bit to just the more important stuff. So today we're going to get factory orders. I still haven't seen that. It's expected to be down 3.5% this month, which is not a good thing. Kind of more, holy crap, the economy's softening data. It was up, factory orders actually up 2% last month. Now coming back down. We'll see what the actual number comes in, but I'm going to guess it's going to be down. And of course, that pointing to a softer economy. Tuesday, no real data, just earnings coming out. We'll get some housing data from Toll Brothers, Smuckers, and some other consumer companies going to be reporting. So we'll get a little bit better idea where earnings are. On Wednesday, we'll get the Mortgage Bankers Index. We'll get the Productivity Index, which is expected to be up almost 5%, 4.8% for the quarter, man. Super strong number. Unit labor costs will also get on Wednesday. Those are expected to continue falling. Third quarter unit labor costs down 0.9% after down 0.8% in the second quarter. So the cost of employment coming down for businesses. That might be one of the reasons they're hiring right now. So that will get Wednesday. Thursday, we will get jobless claims like we do every week. Expected to be 224,000 this week, up from 218 last week. We'll also get wholesale inventory numbers. Inventory is expected to be down for a change, yay. And we'll also get consumer credit for the past month, plus $8 billion last month. But that's down from $9 billion the previous month. God, consumers and their credit cards. Now on Friday, we'll get the big jobs number. It's expected to be 190,000 jobs created in November. That's up from 150 in October. We'll see, that's going to be a big one. And we'll also get the University of Michigan Consumer Confidence Index, expected to be up 62.3 on the index. So we'll see consumers feeling better about the economy. I'm not so sure. All right, so let's talk about these markets right now. I got to tell you guys, there's so many questions about what in the hell is actually happening. Today I read 4 articles about the threat of deflation. So now deflation is going to be a topic we're going to talk about. So do you really think deflation is a big threat right now? Prices coming down and getting in that kind of vicious cycle of continuing down? What about the pivot? Think the Fed's really ready to cut rates? You think there might be another increase coming? You think we're going to have this perfect soft landing? Are we getting near a top in the stock market? Stocks have done amazingly well. Some people now argument that as the economy turns more negative, we might be reaching a top in the stock market. So there's just so much confusion, so many different looks at this market right now. Totally confusing. Nothing seems very certain right now. I got to say, guys, as you know, I have my doubts that we're going to get out from 2 years of inflation without any kind of recession or economic pain, right? But it seems to be the consensus of the market that is exactly what is going to happen. Even the Fed themselves in their own reports says it's going to be 2025 before they hit their 2% target again. I was reading a lot of articles today talking about how the glide path to 2% and how they're going to start cutting rates right away. Now markets starting to factor in as early as February of next year. I got my doubts about all that, guys. I really do. But the good news is if you've been following the advice we've been given, well, that's going to bother you. It just isn't. You haven't been soaking up tons more debt, so you're okay. You've been paying off what you have. So, you know, we're going to follow this and we're going to try to find a way to take advantage of it. But you're not going to have the same risk and uncertainty as a lot of people in these markets. Okay, so let's look at a couple of quick hitters today, right? I was reading this article today, fascinating stuff. 8 million people in China declared habitual debtors. Now, in Chinese society, it's so much different than American society. In China, in America, you don't pay your bills. You take a big hit, your credit score goes down, and it's harder for you to obtain credit. In China, you don't pay your bills. It's much, much, much more severe than that. You're basically cut out of society completely. You know, people in China still feel shame, still have certain honors and prides that were kind of lost in this country. 8 million people defaulting on loans and mortgages in China tells us a little bit more about where their economy is really at right now. I think they're in big trouble. I think that, like a lot of economies, they're going to see war as an easy way to turn things around. I think China might have to be starting some stuff up here if this economy continues down the shitter. Big meeting today, Evergrande and its creditors trying to prevent the implosion of Evergrande, which is basically the biggest construction company developer in China. So we'll see where this all goes. Today I read another article that had me sad. 17.5%. So almost 1 in every 5 car loans now above $1,000 per month. 1 out of every 5 above $1,000 per month. People are crazy, man. Who on earth wants a car payment that resembles what a mortgage payment should look like? Crazy, 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 crazy. And the case for this deflation, this was the interesting thing today. I mentioned before last week, or even the week before, a couple times I've mentioned it, about the Fed actually pulling money, M2 actually dropping more than $1 trillion, as the Fed is pulling money out of circulation. As those bonds retiring, they're not buying bonds, more bonds, and there's several different ways they're doing it. The verdict seems to be that this has only happened one time previously since the Federal Reserve has been established. That was from 1931 to 1933. We know what those years represent. Hopefully that, this time the reduction in M2 won't result in the same kind of deflation we had in the 30s. I think the market now starting to wake up to the threat of that. Again, I was saying, I probably read 3 articles this morning about the threat of deflation, what it could mean, how, hard for me to believe we're going to go from inflation to deflation in a whipsaw move like that, but apparently some analysts who get paid way more than I do to do it think we will. I got to tell you guys, uncertainty is the word. Batten down the hatches. Follow the advice we've been giving you guys. Invest conservatively. Don't add on new debt. Try to save a portion of all of your income, 10% being the target. Do things very conservatively right now, and you'll be able to afford to go a little more liberally with your money later, because you'll still have some. Anyway, guys, that's it for the day. We really appreciate your support. We will be back tomorrow. I will not be missing days this week, so we'll be here to bring you guys the news you need. A big, big, big week of data coming this week, so you don't want to miss it. Be back tomorrow, guys. Until then, take care. Thanks.